All right, welcome. So today we're going to go deeper into order blocks. Today is day 25 over 30. After today, we have about 5 more days left. Right, it has been an amazing journey. All right, so let's go into the business of the day. All right, so today we're going to be looking more on order blocks and imbalances. Right, so today we're more of ring charts talks. All right, so now we're looking deeper into order blocks and imbalances because usually an order block is usually characterized by imbalance, right? You know that anytime market creates that last candle that displaces the downside, there is usually an imbalance created by that move. All right. So for instance, now you can see that there's an imbalance between this and this. All right, let's try to look at the ones that stand out. The ones that stand out already. Right. Look at this move. Look at this imbalance here. And so the gap between and both. See, that's your imbalance. Right. Between this candle and that candle. Right. But yes, there is an imbalance now. Right. Right. I'm trying to be this not overlap. Right. You can see it. This is it. You can see that after other blocks break, we tend to see imbalances. And now there is something I want to point out. Many people have been asking a question, okay, which other block should I use? How do I select my other blocks? Right. How do I select other blocks? Because sometimes there may be several other blocks today. So you're not left in the dilemma. Which other block should I be selecting? Right. Now, there's a way to select other blocks, which I'll be discussing now. Now, the simplest way to select an order block is by looking at the order block just before the imbalance. Like now, look at this chart very carefully. Firstly, we have an order flow. Remember, I told you guys about order flow. So there are two ways you can do it. So right now we have an order flow, which was this last push up. That's your order flow. But the issue with this order flow is that the stop loss is large, the distance is large. So you can't just put your limits here and then stop loss above it because the stop loss is very large. So if you want to refine your order block, if you want to refine the exact zone you're looking at, you're not looking at what? Not looking at what? The very last up candle before the imbalance. So now you're looking very carefully. You can see that there's no imbalance of these other candles. So you can simply move your area of interest to the exact area before the imbalance. So you can say, okay, this is my order block, or this is my last on. So you can select this area here because this is the last up push. You can see this is the last up push before what it drops. So that is how you select order blocks. Right. You select it if you want to refine your entry. If you want to actually refine your entry, you're selecting the last very up push before the imbalance, right? I'll just put a line there to delineate the exact areas. But I want to draw this box now. So if I take my tool here, this is the low of the line, and then I can see something for the future. Can you see? Although it did not sell on because market changed bullish, but I can see how it came nicely, hit it and then dropped before finally was reversing high, going higher, right? So that is how you actually select your order blocks. So what about asking me, how do I select order block? How do I know the one that is the original one? And you look at the one that is just before imbalance. I want to select order block, sweep some kind of liquidity. And I can see that in this move, this candle swept the high of the previous candle. So want to see the kind of liquidity sweep before selecting that area. So you see, number one, this let's take this box off so you can see. That's why this candle is high, took out the high of the previous candle. That is a form of liquidity sweep. And you can see that that was the last area before an imbalance. That is how you refine your entry, right? The same thing also applies here. So for us to define my entry here, I would use this exact candle because this is the last candle. Number one, it saw the high of the previous candle, and then it made up some imbalance. So that is for us to define my entry. That is my exact order block, right? The exact order block is the one that sweeps the previous high, the last high, and then makes an imbalance. So that is If you want to define your entry, this is how to define your entry. But the market here was bullish. Right, that's why the reason that this did not hold. The market was relatively bullish at this particular spot. That is why it did not hold. So if I also select here now, can see if I was to select my other block now in this particular instance, what should I do? Remember what I told you that if you're looking to refine your entry, look out for what the exact candle that let what to sweep. So if I was to refine this, I will simply use this full move. Why? Because there was some kind of liquidity run right there, right? Kind of liquidity run right there. There was some kind of liquidity run right there. That's why I'm selecting of picking that candle for my usage, right? So I'll be refining that exact candle for my usage. Now that is how to refine other blocks. Right? I'm just teaching you how to select other blocks. Right. So select other block is a function of seeing a liquidity run of the previous candle and then looking for one imbalance. Right. So the imbalance is what really qualifies the other block because the imbalance tells you that that candle has not been indicated. All right. That is how to select it. But if you was to choose another block now, and look at this exact area, I will choose what this last of candle because that is the candle was before that swept a previous higher candle and then what made imbalance. That is how you select other blocks, right? You should not by looking at the candle that was made an imbalance and then swept the high of the previous candle. That is the best way to choose an order block, right? The one that has an imbalance. That's how you know the exact order block to be using, right? So let us just quickly go to the lower time frame to see if there are beautiful opportunities using this concept. I actually caught an EU trade yesterday. I want to just use it to explain to you guys what I'm talking about. So now, so I called this particular session on EU. It was yesterday or Wednesday. I called this up before London session. Right? So let me use my trade to explain it to you. So what happened there? Like what happened there? So I was bearish because this market was bearish. Watch this. I told this trade. You can check my Telegram community. I think I'm lying or I think I'm telling stories. Check my Telegram community. Say I actually took this trade. Check my Telegram community. So I had the previous day low here. This was our liquidity area. So this was the overall low. But I was targeting this here because I was targeting this area here because of you can see relatively equal. This was Asian low. This either from the Asian session, right? So I was targeting this low, and if you look very carefully, markets came into what this area, right? Markets hit this candle. Now I told you guys that if you were to select the other block, select the one I took out the high of the previous candle before looking at it. So to me, I was looking at this whole up push, right? So that was what I was looking at. Although I was not really focused on this. So I had this last up push, right? This last up push. If you watch the market only hit it, right? Market hit the up push. So what happened? I was targeting this low. Now watch something. Right. So what happened? We had was a break of structure here, or a change of character here. What happened? We had a break of structure here. Right. So actually I took this trade. You can check my Telegram community to confirm if I took this trade or not. Just check my Telegram community. Person is very hidden. Just take care. I should do this trade. Right, so I had that break of structure. Now remember what I told you guys. The candle that stood behind the previous candle before making what imbalance. Right. So if you watch here, we had an imbalance here. So you can see imbalance at the right side of the candle. So I was targeting that candle, right? So I had an imbalance to qualify this. This was my entry. I was targeting this candle, the whole that whole candle, that other block there. So you can see that it was a very nice one. I can see that this entry formed above an inducement. So you can see the market actually caused some kind of inducement here. So an inducement here. I do that. Watch my video on inducement. I think this is during this part of this 30 days teaching. I think it should be around day 13 or 14. I can't remember the exact day now because it has been a while. Right. So we're more than 10 days ago. Just go to the playlist and check out that video. And so I had this break of structure, I had this other block, I had this inducement. So I simply sold there, I was targeting here, somewhere around there, and I took my profit. Though if I held the trade, it was a very nice one. I don't know. My trading system, I don't hold trades for so long because of market tends to start reversing. You can see, market start reversing. So most times I'm not able to tell when the market is going to start reversing. You can see, market reversal came so much back before dropping. So I just simply took my profit as now. So 1 to 2 point something or thereabout, and then I call it a day. So now watch again. Watch something. Watch this. Okay. So we had that move, market drop. Then the market made another other block. Right? Here's the order block, this candle. It took out the high of the previous candle. And not only that, it made some kind of imbalance of the price. So what is the market take out the high of the previous candle and then make some kind of imbalance. So this now qualifies as well as an order block, right? So you can call this an order block, this candle, right? Then it was another order block. So market came there again. Can you see the precision there? Market came with order block and what happened? Sold off, right? Because it gave a confirmation here. Here's the confirmation. Market broke this swing low. So you had a swing low broken by that move. I had a swing low broken. This is deep studies into other blocks, but I don't think you guys understand this thing. So we took the swing low out, right? So we took that swing low, and then I think we play this imbalance here. All right, let's see the market did not come down. So the market played the imbalance here, right? For me, I was to take this. Although the reason why the market did not come back is because we had already tapped into a previous order block, right? If there was no order block tapped into the market, me, I would have been targeting somewhere around there. This for my entry. So I have been targeting my entry right here. My market will still come back there. This is where I'm targeting, but that can look at liquidity and made an imbalance, right? So I'm targeting that whole. So for me, I'm targeting this move as my order block, right? So market did not come back there, and that is very fine. So market doesn't always have to activate your order block, right? So how would I mean? So maybe today we see price go to this point, right? That's where I'm looking at if I was to sell, because that is actually the extreme order block, right? Market did not come back there. So for me, I'm targeting this last push up that made with an imbalance and also took out what the high request candle. So notice that when the market takes liquidity, it might not want to do it again, right? Market already took out liquidity here, and the market might not want to do this, might not want to come back to the original view. So this happens a lot, right? So when you have many imbalance, that imbalance here, you have another imbalance here. So when you see this kind of setup, where you see imbalances double, market might tend to choose the first imbalance. So for me, I would have been likely I would have been trying to play this off a better risk reward, right? So that is fine. It's okay to miss this kind of trade. You must not catch everything. So it's okay to miss this kind of trades, right? It's very okay to miss. You mustn't catch every single trade, right? So me, I'm getting this high. If I see market did not have it, getting that high, take out this low. Let me know the target. Market actually came and took it out. That was beautiful. I will see another block printed here. Watch this. See this candle here. Look at the high the previous candle and made with an imbalance. We also had this other block here. So this look at the high the previous candle and made an imbalance. So you can see that other blocks have been printing here. So the most qualified other blocks are those other blocks that create imbalances and takes out the high of the previous candle. So when I say other blocks, I also refer to institutional candles. So this is how to refine your entry. The final entry is simply looking at the exact candle that took out liquidity and made an imbalance. So you can combine imbalances and other blocks together to make a particular bias, right? So you don't have to separate it. You don't have to separate other blocks or institutional candles, or you don't have to separate it. You can just combine them. If you see other blocks with an imbalance, and it's very nice, right? So let's look at G A. What can you see here? This candle, what did it do? It took out the low of the previous candle and was made an imbalance. So that is a very good other block to trade. This is a very good one, right? Took out the low of the previous candle and was made about same thing happened. You can see this candle took out the low of the previous candle and was an imbalance. That is our other block as well. You can see other blocks are printing in this chart. Right? That's our other block as well. This candle here. So candle, right? You can see beautiful market run higher, right? So you must always consider the trend of the market before considering your order blocks, right? You must consider the trend of the market. Trend of the market is very, very important for choosing your order blocks. You don't want to be taking um, order blocks that are counter trend because it's going to get hit. Your stops are going to get hit. Imagine we're looking for bearish order blocks. You can see market was bullish here. Imagine we're looking for sell order blocks here. Maybe you want to choose this order block, or this order block because this can look at the high the previous candle would made an imbalance. So if you want to choose that as your order block, you say you have lost this trade because the market was bullish. So you have to understand the high time frame Order block is just for making entries, just for refining and making an entry. It's not for determining the bias of the market. So you have to understand the higher time frame bias of the market before choosing. Right. So that's right. So if you want to like take our profit blueprint, just use the link in the description. It's for just 50% discount price of 50% discount price of 55,000 naira, and to be doubling on the 1st of November 2023. So you can also use the link in the description to get a preprint. Alright, so let's now okay now yesterday I talked about institutional candles. I talked about how to identify them and all of those fun stuff. Right? So I talked about okay, so I talked about imbalances yesterday. So I plan to talk more about entries right now. No matter the um time frame you're using, or no matter the concept you're using, there are two things you should look at for, right? You should always consider the trend of the market. You must always identify, okay, is this market bullish or is it bearish? You must always identify the trend of the market. The trend of the market must be identified, and you must identify what the unmitigated PUI, right? So, let things look at for the frame of trace of, so you must identify the range, the unmitigated PUI. So the unmitigated PUI could be an imbalance, it could be an order block or an instrument candle, whatever you use, right? It could be a breakup block, right? So it doesn't matter. So this unmitigated PUI could be an imbalance, it could be an instrument candle, it could be a breaker, it could be anything at all. It could be a key level on the higher time frame. But the most important thing is to know the trend. You must know the range. It could be a key level, right? So when you understand the trend and the range, trend simply means is market trending upwards or is it trending downwards? While range simply means the last lower high and last lower low. So the market is bullish now. This is your range between this high, between this low, and that high. That's your range. That's what I mean. So identify the current market range on the time frame you're using, right? So this is your range now between this high and this low. So you want to be sure the market is in a bullish range because the market can be bullish and yet be. For instance, now if the market is bullish, right, and the market is coming down, right, on this lower time frame, if you check this chart on a lower time frame, and the market is coming down the phone is low. If you check a lower time frame inside this move now, you will see something inside there. Inside this move down, the market will be doing what? We're creating what? A bearish range, right? Market will be doing this inside where this down push on the lower time frame. So you want to make sure that this range is aligning with what? The higher time frame range. So once the market is able to break structure and give you what? A bullish range. That's what you're looking for. So the range must be in line with the higher time frame and in line with the PUI. So if you have the bullish PUI, they want to see the range of the market in line with what you have. So since the range of the higher time frame is bullish, you want to be trading only when the lower time frame range is also bullish. So the range has to be bullish so that you can know, okay, the market is ready to buy. It's not when the market is still retraced and you're trying to buy it. It's not right, right? Wait the market to give you that bullish range in line with the higher time frame range. This is what we call a range. The last high and the last low, right? So you have to wait for the market to change the range and give you what you can see on the higher time frame, right? So now the next thing, it was always obvious you have to have your PY, right? The PY is even before the range. So the PY is before the range. So you must identify, are you going to use a breaker block? Are you going to use an institutional candle? Are you going to use an order block? Are you going to use an imbalance? Whatever the case may be, you want to be using that as your PY, right? So let's go to the higher time frame to see where you can spot higher imbalance on the higher time frame, right? So you can see this was a very beautiful example of an imbalance. So we had what? Watch this. We had this POI here. Can you see the POI imbalance? Markets came into that imbalance. This is deeper studies. We're just going deep. We're going very deep today. This deeper studies into order blocks and imbalances. Right. So we had that imbalance right there. Right. So we had that imbalance there. Forget the drawing. I don't know why it's acting up. Right, so we had an imbalance between this high and this candle. Let me draw it properly just for it. Because this, what of those are watching this video for the first time. I know why it's acting up. Right. Sometimes students can be very, very sloppy. All right, this was great from here. Right. So we had an imbalance there. So I'm looking at the high back candle. So we had an imbalance there. It's not properly drawn, but we got trading view and the and now what is doing now. I don't want to waste more time on that. So what we have here, we have markets come to this imbalance there. So let us check here if we will see this on the 6th of September. Let us see if there was a lower time frame confirmation on that market. All right, so let's go to the 6th of September. Yeah, so 6th, I think. 6th October. I'm not really sure what I'm doing. Or maybe let's go to the daily time frame. Be sure that date again. Maybe sure that date. The 6th of September. So you know 6th of, so 6th of September is what I'm looking at here. 6th of September. All right, so 6th. So this is the 6th of September. 6th. 6th of September. Go to. All right, so I think this is PY. So that is it. So markets came with that PY. Can you see that? This is that 6th of September. All right, what happened? The markets hit the imbalance area. You can see actually what kind of shift. Markets failed to make a new high. Don't worry, I'll teach you guys about SMS or failure swings. So I don't want to talk about failure swings. So markets failed to make a new high and then break over. Right. So we now had what a bearish range between this high here and this low. Market came there nicely, tapped into it and then dropped. We had another bearish range between this and this. Market came there, tapped into this area and then it was dropped. Another bearish range between this high and this low. Market came, retraced in, dropped. So you can see how the range has been printing. We had another one here between this high and this low. Markets came there and they kind of reached through and then dropped. So range does not mean the market cannot reach through. Range does not mean the market must be perfect. As in the market is in a range, um market can still tend to be pierce through the range before dropping. So it's very allowed. Market can still choose to pierce through the range, creating what we call a liquidity sweep, and then going consequently the overall direction which we originally intended, right? So I think I should wrap up this call here. This was also for you guys, but I don't want just to talk about one topic. I just want to wrap up everything so you guys can have a better feel for what you're doing, right? So I hope to see you guys in tomorrow's call. Tomorrow we're talking about a lot of things tomorrow. So I hope to see you guys because tomorrow we'll be going into the ending parts of this teaching. Tomorrow talking about correlative analysis, how to correlate between different pairs, between DXY, between this and that. So I hope this was insightful. I hope to see you guys tomorrow. If this video makes sense to you, do want to like this video, share it with your friends. And if you want to be part of our paid mentorship or our profit blueprint, just use the link in the description. And I will see you guys in the next teaching. Have a wonderful day.